Hi, my name is Kyle Magatelli from Student Doctor Network, and today we are joined by Bill Olmsted of DisabilityQuotes.com to discuss an extremely important topic, physician disability insurance. Bill, thank you for taking the time to join us.
Kyle, thanks very much for having me. I appreciate it.
Yeah, absolutely. So, if you could tell us a little bit about yourself and what you do.
Yeah, sure, absolutely. So I'm with DisabilityQuotes.com. We are a financial planning firm based out of Rockville, Maryland, and we've got a real specialty in terms of helping people design income protection strategies to protect their career and their earnings. We work a lot with doctors all across the country, and specifically student doctors and those in training prior to graduation and getting out and starting their careers.
Okay, so this sounds like something that someone should absolutely think about and plan for.
If they rely on their income, I think it's definitely something worth protecting, and we're gonna look a little bit more at that in a minute here to show you exactly kind of what's at risk, what the opportunity is to protect it.
Excellent. So, as everyone can see, we have a presentation here, and let's just get into it then.
Sounds good. So this is the legal disclaimer that the insurance companies require us to have up here for a couple of seconds ahead of starting. So I think that's enough said about that. So as Kyle had mentioned, my name is Bill Olmsted. You can get more details about me by scanning that QR code there on the left. But we've been helping physicians protect their income since 1997. We've got over 28,000 policies with physicians all across the country. And we're really specialists in terms of designing disability programs to protect income in your careers. We do that a lot with what's called guaranteed standard issue, which is a special type of a disability insurance offer that's made by insurance companies to help you guys all get a disability policy in a very easy and economical way without any kind of medical questions. And we'll talk more about that in a little bit, but it's available at a number of the top institutions across the country. You can see them there: Mayo Clinic, New York Presbyterian, Hospital for Special Surgery, University of Chicago, and Mount Sinai. There's about 50 or 60 more now across the country, and it's really a great opportunity if it's presented to you at your school. So your income makes your lifestyle possible. I think that kind of is obvious and goes without saying, but it's really the first place that financial planning starts is with your income. It doesn't really help to plan for retirement 30 years down the road if you don't have an income generating every day, every year to save for retirement and to pay your bills. So the income is really what makes our lifestyle possible, and it's important to protect. It's interesting to see exactly how much that income is over the course of a working career, and we're going to look at that here in just a second. So goes without saying that all of you have invested a huge amount of time and money into your training and into building your career, but the payout for that is significant as well. Upon graduation in 2023, the average physician income was $352,000. And if you think about a 30-year working career where there's a little bit of an increase in income during that time of 3%, the total earned income would be over $16.7 million. That's a huge asset, and one that I have found most people are surprised by. They think their most valuable asset is their home or their car or their 401k plan, but it's really your ability to get up every day and go to work and generate $300,000-$400,000 a year, for the next 30 years. Now, we obviously don't get to keep all that money. But a lot of it goes to taxes, but a lot of it goes to lifestyle, and what we want out of our lifestyle is driven by our ability to afford it on our income. So let's look for a second in terms of what might happen if we didn't have this asset. So things that require the income to be generated every day, every month. Housing expenses, food expenses, childcare, student loans. We'll talk more about that in just a few minutes. But everything that happens in our life financially depends on our ability to get up and go to work. What are the options, if we can't do that? Well, for a short period of time, you might have savings or investments that could take over. You could put things on credit cards, or maybe if you have very nice friends and family, they might contribute something for you. But it's not a good long-term solution. It might be good for a couple of months, but after that period of time, we need to start looking at another option for how do we protect against something that takes us out of our careers for 6 months, 12 months, 5 years, 10 years, 30 years? What if we never operate again as a surgeon and our income situation has changed dramatically because of that? We have to find a way to protect that earned income. So the way to do that is really through what's called disability insurance. Disability insurance helps replace income lost when you're too sick or injured to work. And it's really the only type of financial product that does that. I have talked to other people who say, well, I'll just invest and I'll get an 8 or 10% rate of return and that'll be my disability policy. That might be okay if you do get 8, 10, 15% consistently for over a long period of time, and you've been able to do that and save for 20 or 30 years. You might not need disability insurance. You might be able to self-insure in that situation. But especially just starting out in our careers, we have to shift the risk to an insurance company because we just don't have time to save enough money to cover that risk. One of the questions I get asked a lot, and where most people start thinking about when we start talking about disability insurance is, well, what could possibly disable me? I've got a pretty safe lifestyle. I'm healthy. I drive the speed limit. I live a safe life. So there's really not much that could prevent me from doing my job. Now, physicians are a little different because you guys all see patients every day that probably aren't going back to work in the immediate future. A lot of them are going to use their disability insurance. So the interesting aspect of this is that most disabilities are not accidents. They're actually illnesses. And illnesses really don't care how safe your life is or what kind of a job you have. They can strike anyone. In fact, a recent study showed that physicians have a 1 in 3 chance of having a disability over their working careers. So it's something that happens with some regularity, and it happens no matter how safe you are, because illnesses really, they can strike anybody, as you all know. So what are the options then for disability insurance? Let's look at a couple of those that you're going to encounter over your careers. There's some important questions to ask when we do this. When we start looking at these different options, we're going to ask, well, can the insurance company cancel the coverage on you? Can they modify the terms of the coverage, or can they raise your premiums? And can you be protected in your specialty? That's a really important one for physicians. If you have a very surgically intensive specialty or something with hands-on patient care, you want to make sure that your disability coverage protects you in that capacity, not just as a administrator in a practice. So we want to make sure that the coverage is very specific for physicians. We want to make sure that it protects as much of your income as possible. You can't protect all of your income. The insurance companies want to make sure that you're not too comfortable out on a claim that you never want to get off of the claim. So disability insurance is really designed to protect a significant portion of your income, but not all of your income. We want to make sure that we can tailor it as well. Everybody's got different things that are important to them. For instance, if you have student loans, you probably want to make sure that those are protected as well as your income. We'll talk more about that in a couple minutes. But we can tailor coverage in certain types of policies specific to the individual's needs and desires. Most of us will change jobs throughout our career. So the job you have coming out of school is probably not the job you're going to retire from. We want to make sure that we can keep the coverage if you do change jobs. And you can't do that with all the different types of policies. So we'll talk a little bit about that in a second. And really important, can you be turned down or offered a policy with exclusions? Under some policies, you can be. Prior medical history has a big impact on whether or not you can get a disability policy, and if there's going to be any kinds of exclusions for pre-existing conditions. So let's get into a couple of those different types of policies now. The first one that you are going to encounter, and one that you may have currently while you're in school and training, is group LTD, or group long-term disability insurance. It's typically provided by an employer, and it covers a percentage of your income, usually 60% of your income, up to a certain maximum. So a lot of times we'll see policies that cover 60% of your income up to $10,000 per month. That just means that if you make more than $200,000 a year, you aren't getting 60% of your income covered. So it's important to know what the amount of coverage you have at work is, and if you are below or above that cap. The other thing with that is, 60% is certainly not 100. I don't know too many people that want to take a 40% pay cut in the event they can't work. So there are ways to supplement that and actually add to your employer provided plan with an individual policy, which we'll talk more about here in a minute, as well, just kind of get you closer to that 100% level. Benefits are often treated as taxable income under Group LTD. A lot of times your employer pays the cost of the coverage, and when they do that, the benefits are then taxable to you when received. So while it might be 60% of your income after taxes, it might get down closer to 40, 45, 50% of your income that's really being replaced. The benefit is typically offset by government programs like Social Security. So if you're getting $10,000 a month from your group long-term disability policy, but Social Security disability is paying you $2,000 per month, your employer plan will reduce by that $2,000 and pay you $8,000. So a lot of government programs will offset or reduce the amount of coverage you have through your employer. The coverage can be modified or canceled. So the employer is the one that owns the policy, not the employees. And that means that the insurance company can change the provisions of the policy based on what the employer wants to do. The rates are not guaranteed. And I mentioned, since you don't own the policy, it's not portable. It doesn't go with you when you change jobs. It also may not be specific to your specialty or your own occupation. So we talked a minute ago about that being important. We're going to talk a lot more about it in a couple minutes, but most group LTD plans are not going to protect you in your specialty. If they determine you can do some other type of work, they may not continue to pay you. But most of these plans don't require any medical underwriting or medical questions. So they cover all eligible employees. So that's a quick overview on the group LTD. Let's talk a little bit more about association plans. These are also types of programs that you're going to see throughout your career. The American Medical Association has an association disability plan, and a lot of the specialties also have associations that have these types of programs. They are similar to the group LTD in a number of ways. The insurance company can modify or cancel the coverage. The costs are not guaranteed, and they often increase based on age. So while it looks like an attractive feature when you're first starting out because the premiums are relatively low, a lot of these policies have 5-year age bands where they go up every 5 years in cost. And it gets to be pretty expensive as you get later into your career. They're not very customizable. There's some limited optional benefits. So they can't cover things like student loans. They may not have a cost of living adjustment rider available to you. So they're a little bit limited in terms of what they provide. And they may not actually even protect you in your specialty. Like the group LTD plans, they may say that, if you can do some other type of work, you're no longer considered to be disabled. One of the big downsides that I have seen to a lot of the association plans is also that they will only pay you a partial benefit for a partial disability if you are totally disabled first. And that's a very nuanced language, but basically it means that you have to be totally disabled and then recover, come back to your job on a part-time basis to continue to receive some benefits. The problem with that is a lot of disabilities start as partial disabilities. Illnesses kind of come on slowly and they debilitate over a long period of time. So in those situations, a lot of these association plans won't pay you anything because you weren't totally disabled from the beginning. They don't start paying until you are totally disabled. So while you are slowly being phased out of being able to work, you may not qualify for benefits under some of these types of programs. By far, the most popular type of coverage for physicians that I have seen is the individual disability insurance. It's the most comprehensive type of policy. It provides a lot of solutions to some of the issues that the group and the association plans don't provide. It's individually owned and portable, so it goes with you throughout your career. No matter where you go, you take it with you. It's got the most comprehensive definition of disability, that own occupation, which you'll hear a lot about when you start looking for this type of coverage. That covers you in your specialty. If you can't do that specialty, then you're considered disabled, even if you choose to do something else, like go back and teach. If you pay for it with after-tax money, like from your checking account, it's non-taxable. So if you buy $10,000 a month of disability coverage, you get $10,000 a month without having to pay federal or state taxes on it. The pricing is guaranteed. So you know what it's going to cost today, next year, when you're 60. So the price doesn't change as you get older, with a couple of exceptions that we'll talk about in a minute. But those are actually good things for physicians in training. Some of the policies have graded premiums that start off lower for those in training, which is a nice feature. But even then, you know what it's going to cost going forward. There's a ton of options for individual disability insurance too. You can customize it and have partial disability coverage. You can have cost of living adjustment riders, and multiple types of those to kind of keep pace with inflation throughout your career. And if you have student loans, there's coverage for that as well. They do usually require medical underwriting and approval, and that's one of the big downsides to an individual disability policy. A lot of times we will see people who have prior medical history, and they might get declined from coverage or offered a policy with limitations, like a shoulder exclusion. Let's say you had a torn rotator cuff from a skiing accident, and you applied for disability insurance. They're going to put an exclusion on that shoulder, most likely. Now, if you're an orthopedic surgeon who really requires use of that shoulder to operate, that could be a problem. So getting an individual policy can be challenging when you have prior medical history. But again, we'll talk more about that guaranteed standard issue program. That could be a way to avoid some of these medical questions and get a policy even if you have pre-existing conditions. So what do we look for in an individual policy? We want to make sure it's true own occupation that protects you, in your specialty. I've said that a lot, but it's really the bulk of what you're buying. It's really the crux of the policy. You're going to hear the words non-cancelable and guaranteed. That just means that the policy can't be canceled by the insurance company so long as you make your premium payments, and they can't change the provisions of the coverage so long as you continue to pay for it. They have to continue to renew the policy every year, so you can't be canceled or have the cost changed on you or any provisions changed. We want to look for underwriting guarantees, right? So, if you have a pre-existing condition, we want to look for these guaranteed programs that provide some guarantees that you're going to get accepted. So if we have those available, we want to make sure we're talking about those. Disability insurance is not inexpensive. So if we can get some discounts on premiums, that's important, obviously. My office maintains a list of discounted programs all across the country. And that's one of the first things we do when we start talking to a physician is make sure that if there's a discount available to you through your program where you're in training, we're applying that to the policy. And we've talked a ton about being able to design the policy in a flexible fashion so that it covers all the things that you might need it to cover. So when disability insurance started for physicians several decades ago, there was own occupation coverage that covered you in your own occupation as a physician. But we found that physicians have lots of different duties in their jobs. You might have surgical duties. You also might have pre and post-op duties. You might run the practice and have administrative duties. So if you couldn't have the hands-on patient care, or the surgical duties, but you could do the other aspects of your job, are you totally disabled? Well, the answer historically has been no. That's a partial disability where you're still working as an orthopedic surgeon in your career. You're just not operating. But that comes with a pretty big loss of income. So a few years ago, one of the major carriers in the industry, Guardian, who's a leader in the physician disability world, they came out with a new definition called an enhanced true own occupation definition. And it changed it up a little bit so that you have more ways to get paid if you are unable to do the hands-on patient care or surgical aspects of your job. So if more than 50% of your income is derived from hands-on patient care or surgical duties, and you can't do those duties because of illness or accident, you're considered to be totally disabled, even if you can still do the other aspects of your job. Still working as an orthopedic surgeon, running the practice, doing the pre and the post-op consultations, but not doing the hands-on patient care or surgical aspects. It's really a great definition of disability, and it's really what most physicians, especially those with hands-on patient care or surgical responsibilities, are looking for in their coverage. So how do we continue to protect the income as you move through your career? So when you first start off, you're going to be able to get, a relatively small disability policy, maybe $5,000 or $7,500 a month of coverage. But as you graduate and move into your career and start making $300,000, $400,000, you want to make sure that your disability insurance policy grows with you. So there's two ways to do that. One is through what's called a future increase option, which allows you the opportunity to increase your coverage every year without any more medical questions. So you've gone through the medical questions once to buy the original policy, and now you don't have to answer those questions in the future as you want to increase your coverage. You get that option every year, and the only thing that has to happen is you have to be making more money and qualify for the increase in coverage based on your income. There's no medical questions, so anything that may have happened to you between the time you bought your first policy and now is not factored in. There's also what's called a benefit purchase option, which is, it does the same thing, it just does it a little differently. A lot of insurance companies offer this instead of the future increase option rider, or in addition to it as another option. It allows you to increase your coverage every 3 years. It's a little bit more limiting in that regard because the future increase option is every year. The benefit purchase option is every 3 years. And one of the criteria for the benefit purchase option rider is that you have to apply for it every 3 years, whether you want to increase your coverage or not. So I talked to a lot of my clients who bought a policy 3 years ago, and the conversation now is, hey, we've got this feature on your policy that allows you to bump your coverage up over time as your income goes up. You're probably going to want to do that over the next 10 or 15 years, but we need to apply for it now. It's 3 years after you bought your first policy. We've got to apply for it now. And then if the insurance company approves you for any level of increase, you have to take at least 50% of that. You have to buy at least 50% of what they approve you for to keep this feature on your policy going forward. So there's a little bit more paperwork involved in the benefit purchase rider, but it's also a good way to have future guaranteed insurability as your income continues to grow. Most of my clients who are residents, student doctors, they have student loans. It's just kind of the nature of, medicine today. And when you have a disability policy that's paying you an income to pay your mortgage and put food on the table and live your lifestyle, you don't necessarily want to take from that and pay your student loan. So some of the insurance companies now offer student loan protection. Guardian offers student loan protection on their policies. And you can buy up to $2,500 of coverage above your normal disability income that you get on your policy to cover your student loans. This is for a period of 10 or 15 years, which is where the loans are the highest and your income is the lowest. That's kind of where the greatest risk and greatest exposure is in that period of time. So for that 10 or 15-year period of time, if something were to happen, you'd have income coming in to live your lifestyle, but also another $2,500 a month to continue to pay your student loan obligation. And we have found that that's a really popular feature with people who have student loans, obviously. So how do we pay for a disability policy? It kind of seems like an obvious question, but there are two options. There's a level premium and a graded premium option. I have found that the graded premium option is very popular while you're in training, and I'll explain that in a minute. The level premium, though, is the best way to buy a disability insurance policy over the long term because it locks in your rate at your current age. And we're never going to be as young as we are today. So if you buy a policy now and you have a rate locked in at your current age, and that stays with you all the way till 65, that's going to save you much more money than a graded policy that starts off lower. Okay, the graded policy starts off less expensive than the level policy, but it increases a bit each year. And it eventually becomes much more expensive than the level premium. What most physicians in training will do is they will buy the graded premium because cash flow is at a premium right now. They want to get their foot in the door, get a good own occupation policy that protects their income, but do it at the least possible cost, the lowest possible cost. So the graded premium provides that. And then once they graduate and have more disposable income, they are able to convert the graded premium to a level premium at that time. So that's a great way to have the best of both worlds. You get the graded premium while you're in training and then convert it to a level premium a few years down the road when cash flow is higher and is more affordable. I've mentioned the guaranteed standard issue programs a little bit. If this is available to you through your school, it's really one of the best ways to buy a disability insurance policy. There are no medical questions to be asked under a guaranteed standard issue or GSI program. It's only available to residents and fellows while they're in training at that institution and for up to 90 days after graduation. So it's something you really have to consider, prior to graduation. And if you do, prior medical history is not considered. So if you're that orthopedic surgeon with a shoulder injury, you're not going to have a shoulder exclusion. Past surgeries, chiropractic care, autoimmune conditions, colitis, Crohn's, prescriptions for anxiety or anything like that are not factored into the decision to give you a disability policy. You can't be turned down. You can purchase up to $7,500 per month of coverage while you're in training, and then you can increase that up to $15,000 per month after graduation through the use of that future increase option rider, for instance, just based on your income. So you have to qualify for based on making more money, but we know that after graduation, that's likely to occur. Discounts of up to 30%, depending upon your medical specialty, come with these types of programs. So it's an relatively inexpensive way to buy a disability policy compared to getting it once you graduate in kind of the open market, if you will. And it's personally owned coverage. It's something that you own. It's not affiliated with your school or your hospital. It goes with you from job to job throughout your career. It does have that enhanced own occupation coverage we talked about, which is really built for physicians because of the definition of disability there. And the one thing that I mentioned earlier is you can't be turned down. Well, there's one caveat to that. If you apply for coverage with another carrier, so outside of the GSI program, so let's say Guardian's got the GSI program at your school and you apply with another insurance company other than Guardian and get declined or get offered a modified policy based on pre-existing conditions, then you might be ineligible for the GSI program. So it's really important to investigate whether or not these types of programs are available at your institution. And if so, make sure you talk to the agent who's in charge of those before you graduate, so you keep your options open. What are the benefits of applying now? Well, again, under the level premium option, it's going to cost you less money. You're going to lock in that lower rate for a longer period of time. You all have income right now. You guys get paid while you're in training. So it's important to still protect that income. It's not as large as it's going to be, or maybe as important as it's going to be in a couple of years once you graduate and start making more. But I would say get your income now protected and protect your future income as well. And interestingly, the GSI offers, they tend to, they're in place now at a lot of institutions, but they do go away. They do change. So insurance companies review those on an annual basis, and they determine whether or not they want to continue offering these types of programs on a guaranteed basis to all the trainees. So what's available today may not be available next year. So get it while it is available. You're then grandfathered into the coverage. They can't take it away from you. It's just they may not be offering it to people going forward on a going forward basis. So if it's available, make sure you get it, whether you're in your first year, second year, or nearing the end of training. Next steps. My contact information again is there on the lower left. Please scan that, and that'll give you access to a page on our website to get more information. It'll give you access to my LinkedIn and all my contact information. And if you do want to get a quote and see how much coverage you can qualify for and approximately what it costs, just scan that larger QR code there on the right, and it'll just ask you for a little bit of information about your specialty, your age, and where you're located, and then it'll show you an instant quote that gives you a good sense as to how much coverage you can get now while you're in training and its approximate cost. It's a great way to kind of see what's available to you before graduation. And then if there's a GSI program available at your school, we'll reach out and let you know that as well. And that's basically it, Kyle, in terms of kind of an overview on how to protect your income while you're going through training and later on, and the importance of doing so.
Excellent. That is a lot of very pertinent and important information, that is for certain. So I do have a couple of follow-up questions, and I'm going to leave those QR codes up on the screen for everyone. How much coverage can a physician in training actually get, though?
Yeah, good question. So you can actually get, while you're in training, you can actually get more coverage than your income would actually allow. So if you're in your first year, second year, third year, you can get $5,000 a month of disability coverage. Now, a lot of physicians in training are making 60, 65,000. So getting $5,000 a month of coverage really gets you 100% income replacement, which I said you couldn't do. Well, the only way you can do it is if you do it through these programs that are available to you while you're still in school. If you're in your final year of training, or if you're in fellowship, you can get up to $7,500 per month of coverage. And again, with all of these programs, you can increase your coverage through the use of that future increase option without more medical questions after you graduate. So getting some level of coverage while you're in training, and then the ability to increase it after training, is important. And you can actually get less if you want to get less than 5,000. That's certainly an option too. That's the 5,000 or the 7,500 is the maximum you can get based on your year of training.
Okay. So how long do you have to wait before you can get paid on a long-term disability insurance policy, and how long do they typically pay for?
Yeah, good question. So the typical waiting period or elimination period for a long-term disability policy is usually 90 days. But going back to the kind of ability to customize your coverage and what's important to you, that is one of the aspects of an individual disability policy that can change. So I have clients that want to wait longer before they get paid because it's less expensive. They want to wait 180 days, or if they're more established in their career, they might want to wait even a year before they get paid because they've got cash reserves that are self-insuring that first 6 months or that first year even. Almost all the student doctors that we work with, they don't have cash reserves to take them through 6 months or a year. So getting a policy that has a 90-day elimination period or waiting period is typically what they will do. If you go shorter than that, it becomes really expensive compared to 90 days. So I find 90 days is really the sweet spot in terms of the pricing and the time period to wait. On the back end of that, almost everybody gets a benefit period or a payment period till age 65. It's long-term disability insurance that's supposed to protect your income up till retirement age. So getting something to age 65 is typically what people will do. Although some people do also get something shorter. There's a 10-year benefit period which covers you for pays you for a 10-year period of time should something happen. But most of my clients who are younger and just getting out of training are getting something till normal retirement age or age 65.
Okay, excellent. And last question I had, what about short-term disability insurance? Should that be something people are looking for as well?
I get tons of calls about people looking for short-term disability insurance. A lot of people think it will cover maternity leave. It does not, at least not outside of what is called an employer-sponsored plan. So if you work for a company and they have an employer short-term disability policy that covers all the employees, it's possible that plan might cover pregnancy. But individual policies are not available on a short-term basis. Nor would I recommend them. I talk a lot of people out of short-term disability insurance simply for the reason that, the first 90 days of being out of work will not be the most pleasant time of your life, but it is unlikely to financially bankrupt you. You could go to friends and family, you could go to savings, you could go to investments or credit if you had to for a short period of time. The bigger risk is if you have something that lasts 90 days, is it going to last 6 months? Is it going to last a year or 5 years or 30 years? Those types of situations can be financially devastating, whereas a short-term risk, 90 days, is unpleasant but not devastating. So I recommend to a lot of my clients to save their money on the short-term disability insurance, which isn't widely available anyways, and just focus on protecting the long-term disability with a good quality own occupation policy.
That makes sense. Okay. Well, thank you for answering all those questions and taking the time to speak to us about this. Again, everyone, use those QR codes. Please, please, please protect your livelihood. And Bill, again, thank you for taking the time to share all this with us.
Kyle, thanks very much for having me. I really appreciate it.
Absolutely.